Hi, I'm Liz Lumley from Finextra, and we're here at Sibos in Boston, and we've gathered for you today the panel that Accenture put together at lunch today talking about Bitcoin. So, and really the panel talked about what banks need to know about Bitcoin, which is a big topic. Bitcoin is hugely hyped. We do any story on Finextra and the hits go through the roof. But you said on the panel that it might be almost like early days for Bitcoin, like we haven't even hit Bitcoin 1.0 yet. What do you mean by that?
Well, to put it in perspective, it really is still early days, and the people involved in Bitcoin can be considered early adopters. Bitcoin is a little over 5 years old, and it's accomplished a vast amount in that short time period. You can think of it as a little baby that's still learning to walk and taking on the other national currencies. So what I mean by that is that we're still experimental. We're still in an experimental phase. The core software protocol for Bitcoin is not even at 1.0 version yet. So everything about it is currently in beta, but we are moving beyond that, and we will quickly be very much out of beta, and you're seeing the ecosystem of companies and developers expand around that, both in the US and globally.
So Brett, I'm going to turn to you. I mean, you've made a career out of talking about the relationship between, or the lack of relationship between innovation and banks. And you made a comment on stage saying that regulators will never be able to keep up with the pace of innovation in technology and the digital space now. But my question for you is, I mean, do they even have to keep up with the space? I mean, someone from, I think Jeremy, you said on the panel that maybe the regulators should just let stuff like Bitcoin and cryptocurrencies take care of themselves. So do they need to keep up with innovation?
Well, I think the reality is we've hit peak regulation. Yeah, it's like we're at that point now where all regulation is doing is adding cost to compliance infrastructure and adding friction to the customer experience. If you look since the Patriot Act, certainly since 9/11, none of the regulation that's been introduced has materially improved customer experience. We've also got now the added situation right now where you've got things moving so rapidly, so quickly with Bitcoin and other technologies like that. Apple Pay recently and other things. I just think it's going to be impossible for regulators to stay ahead of that curve. They have to be measured, and they have to look at systemic risks over time, and all of that takes time for them to figure out a strategy how they're going to regulate things. So I think regulation is going to have to become not necessarily relaxed, but more broader in terms of its rule setting, and more around principles of the system rather than specifically regulating something like Bitcoin. And the reality is the financial services system is well overdue for an overhaul in respect to the way we look at identity, the way we look at the movement of money, all of these things. There's so much friction in the system today, and adding regulation is not going to improve that, it's only going to increase friction. So we should let some of this stuff go and jump in when there's a risk to the system or when there's a risk to the market or customers. But until then, I think we should stay back and let some of this innovation happen, because at the end of the day, innovation like the blockchain with Bitcoin and tokenization could dramatically reduce financial crime, fraud,
yes,
risk, these sorts of things. So rather than try and fit it into the old banking box, let it out for a run, let it free.
It might be more beneficial for banks, which sort of leads me to a question for you, Jeremy. The theme of the lunch was what do commercial and transaction banks need to know about Bitcoin, and sort of I think this needs to be embroidered on a pillow at Finextra. What does this mean for banks? This is our big question. So this is it to round us off. What does Bitcoin mean for banks?
Well, Liz, as I said in my presentation, the cat's out the bag, the genie's out the bottle.
Some more.
The technology is now in widespread use, and it is the technology that is the really interesting part about cryptocurrencies. And banks need to realize that their customers, both consumers and corporates, will increasingly be using the technology, whether it be for currencies, for payments, or for other uses. So banks need to understand how cryptocurrencies and crypto payments work.
Mm-hmm. And how the blockchain really works.
Yeah, and how the blockchain works. They need to understand how they're going to react and respond when their customers come to them and saying, what are you the bank doing with cryptocurrencies, and how can you offer it, what services can you offer us? And I know that this is not a particularly natural act for banks to look at this sort of disruption and innovation, and a lot of them tend to like to be fast followers. So one recommendation I would do is just look at the likes of PayPal, who are adopting Bitcoin as an example, see how they're using it, how that pans out. And similarly, there are banks such as Fidor in Germany who are using it. So there's plenty of information out there to banks to brief themselves and to work out what their position is on the use of cryptocurrencies.